Okay, so I need to bring this up. I think this is our fourth installment, and we are now we building it slowly but surely. But we're over 1,300 people that have seen these videos, and we've done no real promotion. We've not got any. We don't have assets built. We don't have our first guest yet. So I think now we've got a good base and a good enough experience to start having the guest. A Facebook page will be up by the next one of these we do. And I think we're going to become legitimate.
So, Clint, I'm going to push back a little and say, what do you mean no assets? With the eye candy we have like you, attracting everybody out there to come in and say, I want to see Clint live.
Yeah.
I think we've got a heck of an asset right there. You just keep looking pretty, and John and I will just do our thing, and I think we'll go somewhere.
And what people don't understand about this is how Eric very subtly called me stupid. Very well done. You should be an attorney.
At least you're pretty, Clint.
Absolutely. Well, here's the thing, and we didn't do this the last two or three videos. I know we did it in the first one, but people may be finding these at different times. Again, you're an attorney, Eric, and both of you tell everybody what you do very quickly, because today we're going to kind of take what we talked about last week and extend it, connect them a little bit. But I want people to understand what perspectives you both are coming from.
So I am from Chattanooga, Red Bank High School. Went to the Virginia Military Institute. After I graduated from VMI, I flew P-3s in the Navy for 5 years. Then I went to law school at Washington and Lee, came back to Chattanooga, did Social Security disability work for my dad for about 6 years. And along the way, I started helping people who had disability insurance claims, people that were denied by insurance companies for their group or individual disability insurance. So I learned how to help people, whether they get their insurance through work or on their own, disability insurance, life insurance, health insurance. My firm helps people whose claims are denied. We've been doing that now since 2003 in my own firm. And with our latest hire, we have a young lady who, when she gets to take the bar exam, we'll have 7 attorneys doing that kind of work. And by the way, along the way, I played rugby in law school. And then when I moved to Chattanooga, I started playing rugby for the Chattanooga rugby team. And that's how I met my good friend, the good-looking man I here with us, Clint Powell.
Thank you. I get a little plug that I used to be a little bit athletic, and so are you, sir. Hey, John, what's your perspective? What do you do for every day, man?
Every day I use my talents of understanding complex issues, which kind of counter to Eric, where he flew. My job was maintenance on helicopters. So it's helicopters beat the air in submission. And so all the moving parts have to work properly in order for it to fly and beat the air in submission. So my job was on the maintenance side, maintenance officer. And when I retired in 2006, started a risk management firm and a crisis management firm to help businesses unwind complex either lawsuits, insurance claims, and which led me down the road of understanding the insurance world. And I'm going to plug, Clint, I'm going to plug our podcast, which we will start soon, called The Insurance Architect, which will discuss every insurance policy form and how it is intertwined with the banking system and the legal system in America. So, yeah, it's gonna be fun.
I think that's a great podcast. And if you listen to that and go, that seems like it doesn't affect my life at all. It doesn't affect your life until it affects your life. That's one of those, hey, I've got a good driving record until I don't have a good driving record. You want to know about it before you have the problem.
Yeah.
And it sounds like it might be a good podcast for even the professionals in the world and business owners who live in that, swim in that water a lot more often, because there's a lot of stuff they don't know either.
Well, I talked to a very high-end HOA this morning that has been literally jerked around by their insurance companies on the tornado claims here locally in Chattanooga, that want to start their own self-insured captive at their HOA and deal with their own insurance instead of having the insurance industry just jerk them around the way that insurance. They're just good at it. They've got a great process, and so we had a discussion with their banker this morning about what that looks like.
That may be a time for a different question, because I know that that's becoming more I don't know if popular is a good word, but it's more feasible now where you'll have these, like there's one for Christian business owners. There are these big that we talked about associations a couple weeks ago, but there's these big groups of like-minded businesses that come together and buy their own, get the bulk deals. Have you seen that happening more in the last 5 years?
So one of the things Governor Haslam did was bring Tennessee into the 21st century with captives, and I'm a fan of captives.
What is captives? Is that what I was describing?
Basically self-insuring and not going out to the traditional market and asking an insurance carrier to absorb the risk, saying I'm willing to mitigate my own risk, have risk management programs in place, and I'll keep the money if I don't have any claims. That's a captive. And so it's getting more popular. Tennessee is one of the most captive-friendly states in the United States. People are moving their captives from even offshore to the state of Tennessee because of how friendly it is. And I think it gets more popular, but I was at a captive conference where this was being discussed, and the insurance carrier representatives were there talking to the National Association of Insurance Commissioners, and they said these words: if you allow this to continue to happen, we're only going to be left with the bad risk. Think about that, Eric. Think about that. For 200 and some odd years, the insurance companies have owned everything, and now that they've got competition, we don't like that.
Nope, absolutely.
Go figure. Okay, we took a little sidebar. I feel another podcast maybe warranted or video on that. And I would actually like to, one of these days when we dive into the insurance, you and Eric both live in that world. I think that would be a really good show for the everyday consumer. And here's why. We hear insurance, we hear legal, and we in my brain, I'm the consumer. I see these big companies fighting over my X number of dollars every month, and I'm griping because I got to pay more. I'm not getting as much. But you two could probably put some stuff into layman's terms where we would understand what to look for, how to buy it, what to expect, and understand some timelines. I think that would be a good show because timelines are key.
Absolutely. Let's do that next time.
Yeah, I'm all in it. I sent a message out, and I was trying to figure out how we're going to tie this back to last week when we did about lobbying. But sure enough, I'll be darned if we didn't do it. The exact words were, I won't use the exact words. Our retirement systems, the 401k, the stuff we put that goes to Wall Street, that's on that's on the Dow, all of this big stuff that we talk about has kind of been hijacked. I don't think people understand it. And I'm going to preface this with saying there are people out there like Jim Place or John Woods or, Andy Bailey that I know that know about this stuff way more than I do. So we might want to get them on to talk about this and answer some questions. But you both know enough about it. We can have a really good conversation. John, I'll let you start, sir. When we brought this topic up, how do you see that relating? And let's eventually get to where it gets back to the lobbying and influence.
Right. Well, I think, we talked about it earlier, but understanding that we operate on a fiat money system that's generated through the Fed. And most of the time, just from a layman's term, when anybody hears the Federal Reserve, they think it is part of the federal government. Mm-hmm. And so they think that the government has these big, huge printing presses out there that are just grinding away and don't understand that the Fed is actually a series of privately held banks that actually own the money system that dumps money into the banking system, which dumps money into the economy.
Real quick, that is great marketing, though. To call it the Fed.
Well, even when we hear the president say, I'm going to appoint the Fed chairman, but if we look recently about, what happened with the TVA chairman and that process, it's people, and it's what Eric and I want. We want to educate people on this is the way the system was set up. Here's what's happened that's hijacked the system. And here's what you can do 300 million strong to understand that and influence that change, not just with your pocketbook, but with your voice. And the voice and the pocketbook are a powerful two items that can influence change.
So, go ahead, Eric. Sorry.
So let me chime in here. So one of my favorite things to do during these conversations is take what John said and help explain it to people who may be listening for the first time, may not have heard this stuff before in the past. And coming at from what I learned, one thing I learned in the Navy as a P3 pilot, as an airplane driver, is if I put the yoke, push the yoke forward, the trees get bigger. If I pull back, the trees get smaller. You want some simple stuff like that to understand what we're talking about. So when John talks about the fact that we now have a fiat money system, if you go back in American history, for a long time, we were on the gold standard. So if you had a dollar bill in your hand, you could take it to a bank and you could demand $1 worth of gold. And for a long time, $20 would get you an ounce. And you got a coin about the size of a silver dollar that was made of gold that was worth about $20. And for a long time, like from before the Civil War to the early 1900s, that coin was about the same. And that $20 an ounce of gold was about the same. Now, what it could buy, you can look at things to. One thing I've always kind of measured by is a nice man's suit cost about $20 back when an ounce of gold was $20. Now that an ounce of gold is what, $1,500, you can buy a very nice man's suit. It's a little bit more, but that's what happens when you don't have the dollar backed up by gold anymore. So what happened in the 1930s is Franklin Delano Roosevelt, one of the things that he decided he could do to fight against the Depression was to make sure there was more money available. So he took us off the gold standard. But we still were on the silver standard, and silver was a lot more plentiful, and you could take your dollar bill and have a silver certificate and go get $1 in silver. Well, we went off of that under Nixon in the 70s. We went off the coins. 1964 was last year they were made of silver. There was a little silver in the silver dollars after that. But then by the early 1970s, the coins don't mean anything anymore. They're barely worth, they're copper. They're not worth the actual value of that many 25 cents and a quarter. But back before 1964, a quarter was made of silver, and that's what 25 cents was really worth something. So how do you decide how much $1 is worth or a penny is worth once you stop making the money out of a precious metal, if it's just a piece of paper? And the answer is the government can decide based on how many dollar bills they're going to print. So if the total supply of money is, I don't know what it is, but let's just say it's $30 trillion, and that's all that we're ever going to print, then what holds inflation from happening down and makes sure that there's an equal value is the government's only going to print so much money. And the way that applies to inflation, let's keep this as simple as we can. Clint, if you and I both go to the same farmer's market and you and I both have $1 in our pockets, and the lady there is selling a dozen eggs, and she says, "What do you give me for it?" And you say, "I'll give you a quarter." And I say, "Well, I got more money than that. I'll give you 50 cents. You say, "I'll give her 75 cents. And I say, "I'll give her $1. And you say, "Well, I could give you $1 too." That's the most that those eggs are going to cost because either one of us has $1. But if we both showed up with $2, then the price would have gone up to $2 if we both wanted the eggs. At some point, the price might get too high. But as long as we have money in our pocket and we really want the eggs, the price starts going up. Well, when we start handing out more money, we're not actually increasing the value of goods. We're just saying that everybody has more money to buy stuff, and that's how inflation starts. So to keep all that as simple as possible, what's the job of the Federal Reserve? To decide how many of those theoretical dollar bills are floating around, since they're not backed by anything anymore. They're not backed by the gold in Fort Knox. They're not backed by silver dollars. They're backed by the fact the government just says this is worth something, and there's only so many of those available. Then the value of money. Hey, how come I don't get a hug?
I hadn't seen my daughter in a week, so
John, you'll have to give me that hug later.
Hey, watch this, John. Watch this live. Eric, you can finish. Let me hide you for a minute. Nobody will see you. Go say hi to her and come. And you just sit back down when you're ready. Yeah, keep talking, Eric, because I like this conversation.
Well, I guess I'm kind of getting close to the end, but you can ask me some questions as we talk through it. But at the end of the day, if our government only prints so much money, that's how we keep inflation down, by ensuring there's only so many dollars out there to buy stuff. So what are some ways that the government, through the Federal Reserve, which is not really the government, can affect inflation? Is one thing is they could just print a lot more dollars. And how do they really print them? They hand them out to the big banks and tell the banks, this is that much more money you're allowed to lend out. And if they do it for a very low interest rate, the banks are basically handing out more money. And then you get into a whole fight of, well, if you keep the interest rates low on what you're loaning out on the money, does that keep inflation low, or does that create this excess money in the supply? And you can end up having potentially inflation starting again and potentially runaway inflation. And the last thing I'll say on that is most people younger than us don't have a clue about why that's a big freaking deal. It's not scary to them. But you and I and John grew up at the time period when inflation was a real, no kidding, scary thing. I remember when interest rates were 21, 22, and 23%, you couldn't buy a house for less than 20% interest, and no one could buy a damn house who hadn't saved up enough money. And that was all in the 1970s when we went off the silver standard, and people were scared about what a dollar was going to be worth, and we were just printing dollars. Well, similar stuff happened during the Great Depression where the supply of money shrank and people didn't have enough money. That's why no one had a job for a while. And then other things happened to create inflation. It's always been if the government's not careful about its money supply, it can have horrible unintended consequences. And John's back now, so I'll stop my.
What I was going to say is it's almost become a punchline. I mean, it's been that way for years. When you hear a financial crisis happens, and then you'll hear people say, they'll just print more money. They'll just print more money. And we all kind of chuckle. In reality, that's what they do a lot of times. That's not good. They're devaluing the dollar. And John, I know you heard a lot of what.
Hey, Clint, let me just add one more part of that. So when we talk about devaluing the dollar, this is just one of those great stories that helps people understand it. At the end of World War I, when Germany lost, one of the things that they were made to do in the treaty was pay back Russia, but especially France, Great Britain, and the United States, war reparations. So France and Great Britain made them basically hand over a bunch of money in Germany. The way Germany came up with that money to cover that new debt was they went off of any kind of a gold or silver standard and started printing money. They started just creating money. And nobody had ever really done that before in history. So one of the things that's famous, it was during the period called the Weimar Republic, was they were printing money so fast and the value of that money decreased so quickly that the famous story is that you would go to the grocery store with a wheelbarrow full of money in order to buy bread and milk and eggs. And if you weren't careful, if you turned your back, somebody would dump the money out on the sidewalk, leave it sitting there, and steal your wheelbarrow.
Wow. That's a world I don't want to live in. That's a world I don't want to live in.
Well, but, Clint, what I was going to say is just imagine what Eric just illustrated in inflation and then take the reaction the American public had at toilet paper shortage. I mean, just that one commodity, toilet paper, became this frenzy in America. What happens when it's water, milk, and bread? And so
we're very close to having a podcast about socialism.
So we are living. I think, if you look at if you read the book, The Fall of Rome, and you look at the place that they were at the same time as we were, we have this Y in the road where we can correct the actions that we've made, that the citizens have allowed, that the elected officials have been bought off. We can still correct it. I don't think we're too far gone. However, we only have what I feel like is a small window to start that correction, because you can't just turn this aircraft carrier back around on a dime. It's going to take moving the economy, and we're talking about a 2-decade process to rebalance as far out of balance as we are.
I don't think we can get there, though. Again, and I will promise, if you're watching this down the road, we're getting ready to pull it back to your 401k and retirement. I don't think we can turn this ship around, and this is where I'm very positive, very optimistic about it. Unless the social discord, which I now am completely, and the media, I'm convinced, start using different tones with each other, setting realistic expectations, and having honest conversations without blaming and name calling. And if we can't do that, then I think it will get slightly worse before it gets better. And I think in this time of history, the constraints of the Constitution and the Declaration of Independence will be pushed and tested more than ever before. Well, because it's from internal, it's not from external.
I'm going to tell you, the only thing stopping it right now, in my opinion, is the Second Amendment, because no one knows exactly how many there are and how much ammunition there is. And that is an unknown quantity. And if you've been to Hazard County, Kentucky, or some of the places that I've been, it's not like where we're at. And those people don't mind to do what they need to do with unregistered guns and homemade ammunition that they've made. They don't care.
Well,
So,
and
hey,
go
Clint,
ahead.
this is my chance to do my once per podcast commercial real quick for the organization I'm now the Tennessee co-chair of.
Are they a sponsor?
Braver Angels.
Oh.
Yeah. I could take it out of my I'll give you one half of my salary, Clint, for the volunteer work I do for Braver Angels. But they're a national organization. They get an equal number of red people and blue people in each leadership position, and they are dedicated to restoring patriotic empathy, learning to listen to the other side, restoring open communications, a safe place for people to talk through issues, and learning what the other side thinks. And everything I've done so far, it's just been an absolute amazing learning process that even people who you would consider to be extremely far right and extremely far left, ordinary citizens can talk through these things once they get past the rhetoric and realize that there's a lot of common ground. And one of the problems we have right now in the United States is we're not having enough conversations between red people, blue people, green people, libertarian people, whatever it is, and trying to find the common ground because we're too busy getting scared and wound up by the news either not telling us the truth or telling us an exaggerated version of the truth. And that's why what we're doing in this podcast and what some of these other groups are doing about just educating ordinary American people is so important.
Well, and two, and I think it's time to come to the realization, I don't care what team you raise your foam finger for, there are people on both sides that make money on, invested in, and get influence from keeping us separate. They have got to have us calling them names, them calling us names. They have to shut down real conversation, because once you start getting to talk to someone and you get to know them, then you actually are forced to, am I going to accept this person based off what I know about them, or am I going to keep it on what I thought about them? And that is what I don't think there are people out there that I think are making hay with us being divided. And I don't understand. We're smarter than this. And I don't understand why we don't come together on the common ground stuff, which none of it's perfect. And it doesn't matter what country or what area you've been in. But, man, we have done so much good. To only focus on the good and our only focus on the bad, I think is doing a disservice. So I'm looking forward to it. All right, John, here we go. You ready? Paint the picture. Now, when we started, you were talking about the retirement, the 401ks, and you were drawing a box. The government's here or your retirement's here. You want to walk people through that so we can jumpstart that part of it?
Yeah. So imagine you're looking at a wall, at a box, and you see the Fed pushing the money down to the banks. You have a line from the banks to Wall Street. And from Wall Street, you have the Fortune 500 companies. Those Fortune 500 companies' stock is traded on Wall Street. What's happened over a period of years is there's been a IRS tax code called the 401k that has allowed the business owner and the citizen to participate in a profit sharing, or excuse me, in a share program with their monies, which flows back to Wall Street. That Wall Street uses that money to do the calls, puts, and swaps, makes their money. The Dow was down 800 yesterday. It was down last time I checked 553. So we've got this almost 1,400 point swing that the American people have no ability to understand or influence inside that, and that separation and that short in between what it goes to and what they're going to buy it at, and that money that's made is made on Wall Street for people that are large investors, and the consumer is on the outside looking in at a statement balance that's lost 30% of their revenue. While that's going on, that money is used from the Fortune 500s and the Wall Street firms in order to influence the three branches of government through what Eric and I refer to as crony capitalism, lobbying consortiums, to influence change that benefits their regulations, there being the Fortune 500 companies, and they're using the American consumers' retirement funds to do that. I hope that was
Yeah, I mean, basically, the money that we contribute to our retirement funds is completely dependent on how Wall Street does. And while the money's sitting there, they're using that money to go influence the fourth branch, which we talked about last week, which is the administrative and all the associations. Is that basically it?
That's it.
And if I'm retiring today, I'm kind of screwed. If I retire, but that's why they tell you to stick in with it the long term. I mean,
well, that's the old fuel prices have gone up because there's a hurricane potential in the Gulf and the Middle East has got some conflict. That story's been going on ever since I've been a kid, can remember. And in the world of investing, it's, well, you got to play the long game. And so that's just talking points to me. And what I've started looking at across insurance, oil, and banking and investments is I've started looking at those consistent talking points year after year that are in commercials or trained to be told by representatives of those organizations. And then at some point, you've got to look up and ask yourself, how year after year is it the same talking points? And then I'm supposed to believe that they're out, protecting my best interest.
Hey, Clint, can I go? Let me do my thing again to give us some basic building blocks for people who don't live in this world that John and I do of big numbers and the way the economy works and insurance and investments and 401k. So let's start with some really basic stuff about what happened in our economy with people's retirements. For a long time, you worked for a company and you were expected to save on your own, and that was it. And when you left the company, you went on and did something different. But during the 1900s, companies started to realize they could keep people around longer, and it also became part of the union bargaining to offer retirement plans. And what they first did, and what a whole lot of companies did, and a few big companies still do, is something called a defined benefit plan. And a defined benefit plan is one that you work there a certain amount of time. And if you stay there long enough and you reach retirement age, they're going to give you a retirement that the company is going to pay for. A real simple way to think about it would be you can retire from this company after 25 years. Every year you work here, we will promise to pay you $100 a month when you reach retirement age. If you work here 25 years, you get $2,500 a month. You stay and work longer for 30 years, we'll give you $3,000 a month. You work here for 33 years, we'll give you $3,300 a month when you get to retirement age. And retirement age might be 30 years of work, it might be age 65, whatever the deal is where that company was set up. What's the big problem from the standpoint of the employer when they make those big promises? Well, they don't have to pay that money right now. That's up to them to save it. But what happens when eventually you've been doing that for 30 or 40 years, you get a bunch of people who are retired, you got to have the money to pay all those retirement benefits. And if you weren't smart about it, you can get overextended, which is what some of the big car companies have done back in the 70s. And then again, more recently in the 2000s, they made the big promises. What's the upside for the employer? The upside for the employer is they can make these big promises in the future, but they don't have to pay for it now. And then as they can make deals when they're bargaining with unions to promise to eventually pay them more money, but they don't have to actually pay them any money today. So one of the ideas that came along, and there's some real merit to it, is the defined contribution plan. And that's what now most people have. And it's what John is talking about, people being invested in the stock market. Instead of promising you to get a certain amount of money when you retire, depending on how long you work here, what we're going to say as an employer is every month you work here, we'll put $100 in your retirement account. You can match it or we'll match it. There's different combinations. We'll put in 100, you put in 100, we'll put in 50, you put in 100, whatever it is. And that money goes into an account. And most of the time that's taken out of your paycheck before you pay taxes on your paycheck. The money grows and you pay taxes when you take the money out once you reach retirement age, which is typically 59 and a half at least, and then it can be different. Then that defined contribution plan, the employer doesn't have anything to do with it once they put their money in this month, and you put your money in this month. The risk is that you're putting all that money for the most part in the stock market. And if the stock market slowly grows over years, over decades, everybody's going to be fine. If the stock market does a October 1929 nosedive, a whole lot of people counting on that money for their retirement are going to get, I think the technical term is screwed. So that's one of the big risks. And so what government has done in order to make sure that people are going to be safe, not complaining, not rising up, not using their Second Amendment rights to storm Washington, D.C., is put in place policies to ensure that the stock market continues to grow, but not too fast and not too slow. But then there's a whole lot of other people that have their fingers in that pie, and that's what John's talking about. Is once other people start putting their fingers in that pie, all kinds of interesting things can actually be happening behind the scenes. The good news is, so far, we have slowly grown, and people have money in their retirement accounts, and we're doing okay. But there's some risk and some downside, and that's back to you, John, to explain how that, to cover what starts happening there.
Well, I was going to say this real quick too, and I mean, the concept of sticking with it for the long haul has kind of worked, though, hasn't it? I mean, if you've been in the stock market for 20 years, you've done okay.
I would say no. I'd say if you took a 40-year rolling roller coaster graph of the stock market, it's worked if you've had somebody that knows how to look at what the stock market, where it's heading, the trends and things like that. Then when you got digital involvement inside of it, so when you got technology involved in Wall Street, they being Wall Street and brokers are making millions of dollars over milliseconds of calls, puts, and swaps. And the average consumer has no conscious effort to be able to, they don't know how to do that. They don't have millisecond trading abilities. Like I forget the cost that was associated with putting the line from Chicago to New York. And the faster the line was, the more money that can be made. But to Eric's point, the GAO put out something within the last 2 to 3 years that said the unfunded liability of all the pensions and governments, whether it's state, local, or federal, is $100 trillion right now. Now, that was what the GAO said.
And that's an important point. So while business, General Motors, Coca-Cola, Amazon, Eric Buchanan and Associates, we've mostly switched, at least small and medium-sized businesses almost exclusively have switched over to the defined contribution plans. So our employees are counting on their money growing in the stock market, and we put in so much money each month and they put in so much money each month. What is the opposite is people who work for the government. The government employees almost universally have their primary retirement in the form of the defined benefit plans, that the money is going to be guaranteed when they retire and paid out by the government. Now, there's been some shift in that. I know, for example, I talked to a friend of mine the other day who worked for the FBI, that the younger generation, people that are now in their late 40s and early 50s, are forced to put some money into a retirement plan and not have so much of a guaranteed retirement. But the generation a little older than me, those guys are getting guaranteed pensions. And that's why, and it's like that in all over, TVA, post office, United States military, just, the giant organization that is our federal and state and local government, there's a whole lot of retirees that if they stay around long enough are going to get guaranteed money.
Well, there's over 10,000 people turning 65 every day. I mean, I got one of my friends, Misty Bolt, Medicare Misty. She deals with this all the time. And so I was writing stuff down because I'm big on that. One of the things when I hear you two talk and take things down the road that you guys have been going on that frustrates me, and I know it's not going to happen in 4 or 5 conversations. It may be the 15th or 20th one that we get into when we start pulling some of this back, because I feel like we're just touching the surface of this stuff. But listen to this. Insurance, unions, associations are lobbying. The Fed, Wall Street, health insurance, health care, because there's a difference between the insurance and the care, politics and legal. These are giant mechanical, super big machines that we have put in place that none of us, unless you're one of you guys, but people like me, we know this much about. And everywhere I turn, my day is impacted by the government, by my insurance, by what the unions have said, what the lobbyists have said. I don't blame people for just saying, screw it, I'm working 9 to 5, I'm taking care of my kids, I'm going to vote R or D right down the line, and everybody can kiss my ass. Pardon my language, but I get frustrated listening to this because how do you fix this? What do you do?
I'm telling you, the association model.
My rant's over.
I really think the association model with representation, with leaders that want to affect change for the long-term future of America, is a fix for this process, because it can deal with every one of the issues you're talking about if the people that are involved in leading those changes understood the complexity of it. But at the end of the day, and I've said this before, the reason I didn't go into law is because, to me, law is simple. Now, I say that in jest with around attorneys especially, and they look at me like, no, it's not. But the reality is, the way that the law system was initially set up in America, it was not that complicated. The industry has created a complexity by insurance, courts, and all these things that have gone on. But the law in general is not that difficult. But what you have to do is, all those complex issues that have been created in America, you have to have someone that understands not only the complexity of them, but how to unwind them. And that's why I think the association model is so important, because it allows people to group together who don't understand, the Clint Powells of the world, and say, I don't understand, but I'm going to trust you for $1 a year to represent my best interest.
But Eric, don't you think that the complexity of everything, and I wrote down another one, by the way, education, that's another big thing we can't, but don't you think complexity of all these things start off pretty simple? And because you go from having, 1 million people to 300 and something million people, and there's more influence to be had, they're naturally going to become more complicated.
Yeah, we've come a long way from the days when our ancestors were worried about the rocks in their field and whether it was going to rain enough for the corn to grow, and making the important economic decision was how much corn you were going to try to take the 10 miles over the mountain to market, or how much over you were going to put in the still and turn into whiskey so you can carry more of it. And those kind of simple decisions the farmers had to make. It was hard work and it was difficult, and by golly, it was the life was at least it was pretty straightforward. When it didn't rain, you were in big trouble. When it did rain, it might have rained too much and you were in trouble. Well, nowadays, you've got to have friends who are lawyers and have contacts. If you're a business owner, you've got to have so many lawyers or expert at so many things, or people like John who are also experts in areas and have developed their own niche in advising businesses. So both lawyers and other experts, CPAs, consultants like John, all of us everybody's got to deal with that stuff. And it's gotten so complex, not because necessarily the legal concepts are that complex. And I sure would like to stick a pin in this one, Clint, and talk about maybe in a different show, we can do insurance, but we can also just do a basic law school for ordinary people and talk through some of these issues. But what has happened is a combination of economy. As people become more and more specialized, there's lots of more different occupations. Those occupations are competing with each other to be the ones that are in favor. That associations influence the government. That the government can pick winners and losers a lot more. And this one's just really basic. It's what we've talked about in our previous episodes. The government's got so damn big. Yeah. The government is bigger than it should be, and it has too big a role, and it's got its fingers everywhere in everything, and you've got to constantly worry about it. And part of that goes back to the politics of just some basic decision making. Is it the job of government to be the referee, or is it the job of the government to be the nanny? Is it the job of government to make sure people are treated fairly, or is it the job of government to take care of people? And we as a society have been fighting this fight for a long, long time. And it's come in some ways, it's come to a head. Sometimes it's some parts of it's just the same old story we've been arguing about since the Civil War.
Well, this is one of the things I was talking about earlier. People that make money on our division. You see the media now, and it doesn't matter. Insert president here. It doesn't matter. When they're stepping over the bounds of the federalists, of people that want to keep the power in the states, when the federal government oversteps their bound, one side goes, yes, that was needed. The other side goes, hey, leave the states alone. Then the next time the other team's in power, they flip their switch. They flip up what they're saying. So when you say the government's too big, there is not one of those things I talked about where the government is not the major influencer in how they're developed and changed and how they move forward. Not one of them. You can't pick one of those big giant machines where the federal government does not have its hand just knee deep in it.
Another one of the simple things. The government is. Oh, sorry, John.
Except the insurance industry. Remember the McCarran-Ferguson Act. And I submit that industry by itself is larger than the federal government when it comes to how it can influence change.
But don't they influence, or don't they try to influence it from the outside in then? I mean, they don't use the healthcare, health insurance. They're not trying. Okay.
They're the biggest purchaser of health insurance in America, Medicare, Medicaid. I mean, nobody purchases more insurance than the government itself, but it has no, go out and look at lawsuits where AARP sues the federal government for reimbursement increases every year because they feel like they're getting hosed. And the government writes them a check. That's an association so powerful that it can sue the federal government for reimbursement for the Medicare and Medicaid that they provide to the citizens.
Eric, you were going to say something, and I interrupted.
I was just one of the famous quotes from Ronald Reagan is, "The government is not the solution; the government is the problem," and that's pretty constant. And John, I think this is another one we need to put a pin in. So, Clint, if you'll write this down, the one of the more underregulated parts of our what would you say, parts of our economy, part of our society, is the insurance industry. It's even worse than that because they've taken laws like ERISA, which is the Employee Retirement Income Security Act of 1974, which was designed to protect the working guy, the working man and woman, and protect their retirement accounts and make sure that they had a way to sue to make sure the retirements were not treated wrong. And the insurance companies have managed to turn ERISA into basically a federal protection racket. So the insurance companies can at worst only be sued to have to pay what they would have paid in the first place, but only after deny, delay, deny again, defend, and then you finally get them in court. And then the worst that happens is a slap on the wrist where the judge says you should have had to pay. So there is a real racket to that. And it's part of what we're talking about. But Clint, that's the kind of stuff that's worth a whole separate conversation, is just how does crony capitalism ultimately work and what are some specific examples of it? And ERISA and the way that nobody really digs into that is a great example. And it applies to, what is it, John? Something like 60% of people in the United States still have their health care through work. And it applies to almost all of them. Yep. ERISA only doesn't apply if you work for the government or sometimes if you work for a church. It applies to everybody else for your health insurance. And if you have your life insurance or your disability insurance or whatever your other insurance is as an employee is how you get that insurance, then this federal law applies that nobody knows about. And it's just, but the insurance companies know how to use it to play the game.
Correct.
I feel after these conversations, does anybody on this screen like Monty Python, like the Search for the Holy Grail? Do you remember the scene in Search for the Holy Grail where they attacked the castle and the guy ran up to the castle and hit the wall with his sword? They said, attack, I feel like that guy. I'm running up and I'm attacking, but I'm smacking this big giant 40-foot wall with my sword. I would like to find out, John, and again, pending conversations, I got a list of them. When you say associations are the answer, are you talking, and you used the example of the AARP, we've talked about the NRA, and I know it's different than unions, but are you talking about creating a new association? Are you talking about let's single out 2 or 3 associations that could be used better? How do we go from talking about it to actually pointing at things and saying this is where everybody needs to put their efforts in?
No, I think it needs to be new associations where people understand the complexities of what they're going up against and understand what the actual application process for the association is, what type we need to be. Is it a 501c4? Is it a 501c6? 501c9, which is all benefits related. So a 501c9 allows business owners in the same group class to actually combine their employees to create their own healthcare plan. So that 2 painting contractor can join a 15 painting contractor, can join a 100 painting contractor, and then have the benefit of the numbers from a healthcare standpoint. And that's 501c9.
Well, my question then is, okay, this is where I get to ask the simple questions. I got to close my eyes or I'll lose it. So if I join an association, you start an association that's about benefits, I join that association. How will that affect all these other little things that we've talked about? Is that the crowbar that we can start prying some of this apart, or do there need to be more than one association that people can get in?
Well, the 501c9 has to be benefits only. So I think there needs to be multiples that are set up, and it needs to be specific for, like we talked about earlier,
a purpose.
captive insurance. So all the small business owners that are in the same classification can join this captive, and they can self-insure, and that money that is not used because they've been good stewards of their claims process goes back to their bottom line. And CFOs love it because they call that found money. I'm not giving it to ABC Insurance Company. I'm giving it back to me.
Does this frustrate either one of y'all that what we're talking about, what we want is for our political parties to do? I mean, technically speaking, shouldn't the Republican and the Democrat parties represent their constituents and apply the leverage as needed? I know it's been corrupted. I know we've talked about it, but it's a little frustrating.
I was called this morning to ask to run for a local office. That was one of my phone calls this morning. And they said, what would you run on? What would be your foundation? I said, that's easy, one word. I'd run on insurance. And they said, well, why? And I said, all I've got to say is, do you like paying $1,800 a month for your health care? Do you like paying homeowners and it being denied when a tornado comes through and blows your house away? Do you like paying for disability through a company, and then when you need to use it, they deny the claim on some obscure language that's in that? Do you like that? That it affects every person in America every day, but yet when they need it, it's not there. And this gentleman is 35 years in the industry said, you know what? I don't feel like the insurance industry is doing its job. I feel like it's left me. And I think the consumer feels like today that all this money they're paying into it, the industry has left them and left them high and dry.
Do you agree with that, Eric?
I do. It's funny. John and I have a lot in common. And one thing was somebody just asked me today to run for office. Of course, it was on Facebook, and it may have just been a joke, but it was pretty funny. It was in a long conversation that I was having with somebody. Yes, I agree with a whole lot of that. That how you put that into a political position, though, is a little bit tough. Insurance is a big part of it. But I think it's part of the even slightly bigger picture of just simply we've turned into a crony capitalistic country, that it's insurance and other big industries have too much influence. And the way the system works in politics is there's so much money involved that politicians get there. And if they basically want to have a position of power, to be on the right committee, to have the chance to vote on something meaningfully, to have their legislation move along, they basically have to play the party game. And part of the party game is raising money for other people in your party and for the big PACs. And part of the game is you have to raise enough money for your own campaign coming up next to make sure that you're not having to ask for money from the party. And also playing that game is doing what the leaders tell you to do and vote the way that they're telling you to do it. But the way that they soften those blows and get you addicted to playing the game is that they will put something in the bill that helps your district or helps you out in a way politically, so that it's one big circle of people scratching their backs. But if you don't scratch their backs, you're going to get stabbed in the back.
It's the Godfather.
You have to keep playing the game. And if you don't keep playing the game, you're going to get absolutely.
I love playing games, and I love putting pieces of puzzles together. What I detest is if you don't play this game that is at the detriment to the society that we're living in and the consumer, then you're not going to be part of our game. And that's not me.
I'll tell you this, if you're listening to this, because we made the distinction, maybe the last conversation. If you're listening to this and you're wondering how this affects what you see on the news today, because a lot of people in the world that we live in, again, I think some genuinely don't understand, and there's some that get paid to they know better, but they get money off keeping everybody fooled. You see people pointing to what they think is capitalism and blaming that for so many things that are wrong in today's world. And what they're pointing to, John and Eric, is the crony capitalism. They're pointing to true capitalism.
Not even close.
That's right.
Not
so
even close. Yeah,
they're pointing at that and going, that's why I am where I'm at. And what they don't understand is on the other side of the aisle, the people they don't like are people going, you're right. That is wrong. Let's approach it in a different way instead of we have that in common. The crony part of this is the problem. There's my nugget of wisdom. Somebody take it and go with it.
You're absolutely right. That's one of my, I can't tell you how many times I've had somebody say, and people that are my age, you would think my generation would know better. Capitalism is horrible. Capitalism sucks. Capitalism is evil. Give me an example. And they give an example of something where the law is totally in favor of one company picking winners and losers. That's not capitalism. That's crony capitalism, and crony capitalism gone far enough is what? It's fascism. It's what Nazi Germany did. Nazi Germany didn't actually become a socialist country where the government took over all the industry. What Nazi Germany did was took over all the industry and ran it and controlled it, but the owners still got to make their crap ton of money off of the industry as long as they supported the party. So it made the capitalists into rich fascists. The deal with the devil, literally the devil in that case that they made, was if they played along with the Nazis, they got paid a big pile of cash, and they made it easier for the Nazis to control the economy. I don't think our country is on the brink of Nazism and fascism in terms of the evil stuff that they did, but our country is damn well down the road into where the government tells companies you have to follow these certain rules, and if you do follow those rules, we'll make it worth your while and give you tax breaks and get off your back. But if you try to do it the old-fashioned way and just have a regular capitalistic company that makes a product that people want, and that's what you're going to stand on, well, we're going to get in your way if you don't play the game.
Well, and a lot of that time, the money that they let the companies keep, they siphon it off and go right back and give to the political parties that's in power, or they want to give. That's why I think it's so funny when people start pointing out the donations. Did you see who their donations came from? Yeah, print the full list off, and what you'll find is the vast majority of the big companies may give a little more to one party, but they're giving to both parties. They're hedging their bets, man.
Straddlers. There's no doubt they're fence straddlers.
Yeah, absolutely. All right, John, before we wrap this up, I want to make sure we come back full circle on the retirement side of this. What should people do? Should they find somebody? And I know we had brought up a couple of names like the Jim Places or John Woods, but should they find somebody, like you said, that knows the industry so they can make money? Because they're not going to be able to change the system today. Or
I think they have to find someone that is not attached to a big corporate chain, an independent advisor that can actually, I would say, lives in your hometown, walks out your front door and goes and grabs a cheeseburger with you and can help you understand the complex system of retirement. That's the person they need to find. And
I don't ever trust anybody that doesn't admit to the flaws in their system. Yeah. So I like attorneys that say, you know what? I know most of that. I need to go figure that part out. We need to do due diligence. I like insurance folks that say, that's a question I got to go look up. If you're talking to somebody that says they have all the answers for your money right up front and they don't know you, then that's not a good place to start either.
Yep.
Eric, anything else before we wrap this one up? We're moving at right at an hour, man. Pretty close.
No, I like this one. This one's good. I think there's what I enjoyed today, Clint, and I think is important is we've found about 3 or 4 more topics that could make an entire show, either with a guest or with just the two of us. But I think a huge part of what we're providing, the three of us are providing to people out there, is a basic understanding of some of these things that sound so complex. And if we can keep making them simple and at the same time point out, like John is so good at, of finding those things that people don't know about unless somebody tells them, all that comes together into keeping us all more informed and more understanding of how our country works. Is there a way, Clint, that we can also maybe ask people to send us some more questions? I would love to have the audience send us questions, not just while we're live, but between shows. What would they like us to talk about?
Well, I 100% can do that. And we can start pre-promoting this like for a day and time, like a 24 hours before. But with both of you getting dragged into court and moving stuff, that changes a little bit. So, yes.
It's part of the system.
Hey, you got to have experts. Somebody's got to run up to the wall with the sword and hit the wall.
And what about the guy standing on top of the wall, looking back down and doing the nanner thing? That was the most important castle defense of the Middle Ages.
Yeah, your father was a hamster and your mother smelled of elderberries, sir. I can quote that whole movie, buddy. That's where my expertise. If you ever want to dumb yourself down and have movie quotes, holler at me. We'll do a podcast. All right, hey, we'll do this again next week. If you're watching this, understand that we're going to be talking about the topics for next week and some guests coming up. And yes, we'll start making some announcements so we can get more engagement from the people that may tune in either live or in between segments.
All right.
Thank y'all.
Thanks, guys.
Good job. Have a good Friday. Bye.